Okay, so news is already out that Kenya's central bank today held its key lending rates unchanged while opening an asymmetric corridor around its main interest rate, along with other key measures announced in the monetary policy press briefing addressed by the governor, Kamau Tuje. Drilling down on this and more for us on the show tonight is Aly-Khan Satchu. Ali is the Chief Executive Officer at Reach Frontiers Management. Ali joins us from London tonight. Good evening. It's good to see you. Well, what's in the new Kenya Central Bank's latest decision for you, my friend, as the key lending rate was left unchanged? What else is there?
No, this was the unchanged hid plenty of very interesting developments behind this interest rate decision. I think, firstly, you saw a little bit of tapering off in the inflation rate. The food situation has improved, and I think that gave the central bank governor and the central bank some room to stay pat, because bear in mind, we've had a very large asymmetric repricing of interest rates since the last decision. Interbank rates have firmed up considerably. The government, the central bank, made a decision to look for the discovery price in the bond market and basically paid up in order to encourage people to come into the bond market. That adjustment in interest rates was about 200 to 250 basis points. It was necessary, it was required, but effectively we've had a significant tightening since the last interest rate decision, considerably higher than the move in the policy rate. Now, what we're seeing from the central bank is an attempt to mitigate some of the distortions that we've seen in the last few weeks. And I thought this slew of announcements he made signaled a very subtle, clever monetary policy adjustments from the central bank. And bear in mind that the governor really is of a fiscal background, but the monetary policy steps he's taken were, in my view, extremely sharp and impressive.
Interesting. But again, how will the new asymmetric corridor around the CBR and the interbank play out in the banking sector? What are we seeing right now as far as the market is concerned playing this up?
Well, it's a little bit tricky, but what he's trying to do is basically assist the tier 3 banks, is my view. He's trying to sort of create a corridor where there would be an upper limit of pricing between the stronger banks and the weaker banks. The weaker banks are obviously starved of liquidity or having to pay very penal rates. So he's trying to create this corridor which coerces the bigger banks to lend effectively at lower rates to the smaller banks. And also, he's reduced the rate that the central bank is lending at the discount window as a supplementary measure to allow the smaller banks to access more competitively priced liquidity. So in that sense, I think, it's quite an appropriate, clever, and subtle response to the challenges that some of these banks are facing.
But interesting, I'm trying to find out how this new monetary policy direction, if it's in tune with the fiscal balance that President Ruto's administration is trying to achieve right now. The economy is in a very tight corner. So do you think this will give some relief to President Ruto and his team?
So you're quite correct. We are in a tight corner. This was the build-up of borrowing that occurred pre this Ruto administration, that they're having to now wrestle with this. In many respects, it was a consequence of the previous administration and not the current administration, but they got to deal with it. One might argue for greater fiscal prudence on the side of the government of Kenya. We've certainly seen taxes go up, but the challenge with pumping up taxes is like what you're seeing in Nigeria since you removed the subsidy on gasoline. You see a cratering of demand. I think in the numbers I saw was up to 30% in Nigeria. That's the Laffer curve, and I think the government is at the limits of the Laffer curve in Kenya when it comes to the tax collection side. Therefore, I would prefer to see them doing much more on the fiscal side I don't think they've brought sufficient discipline on the fiscal side, but what they've done pretty effectively is actually go to the market, signal to the markets, look, we're going to pay appropriate interest rates. For far too long, we were just simply not paying appropriate interest rates. We had our heads in the sand like the proverbial camel. Bonds were being undersubscribed, and it was just building up into a fiasco. And what we've done is say, hang on a second, let's find the real market rate. So we've had that price discovery process. We've put rates up to a more reasonable amount. So on the monetary policy side, I think, we're ahead of the curve now.
Do you think that the central bank here is trying to prevent the government going to the Eurobond market next year and also prepare a bit of a soft landing for those Eurobonds that will be maturing in about a year or less from now? How do you think this will play out for President Ruto, who's got to pay up on Eurobond maturing and he needs a whole lot more dollars on the table?
Burson, you're quite correct. And there was an unfortunate comment that came out of the ratings agency Moody's, because Kenya has been proposing to buy back some of these Eurobonds, which are maturing next year and are trading at discounted prices. And Moody's speculated that such a buyback could potentially be considered a default, which to me was absurd, patently wrong, and ridiculous. I've never heard such a thing. The Eurobond market is a free market. If the price of the Eurobond market is attractive to the issuing sovereign, why can't they go into that market and buy those bonds? And that's perfectly acceptable. I've seen it in Latin America before. So just to give you some context to that Eurobond issue, I think the Kenyan government have sufficient reserves now to redeem those bonds. Obviously, they would prefer to roll some of it over. It's a $2 billion issue, if I'm not mistaken, $2 billion. We've had the deterioration in the foreign exchange rate, which means the redemption has grown. But I think essentially they've appointed lead managers as of yesterday or the day before, I think,
yes,
Citi
correct.
and
yes, Citi. Yes, and Standard Bank. Yes.
So look, I expect them to be able to weather this Eurobond maturity. I think, they would like to kick half of it down the road. And I think they can probably come up with a structure which does that, kicks half down the road, redeems half, and there is sufficient in the reserves, such a thing.
Okay, so what about ordinary Kenyans on the street of Nairobi, elsewhere in Kisumu, all the way down to Mombasa and elsewhere? Are they dealing with a shilling-dollar relationship right now on the exchange front? How much does that fetch you? How much do I get a shilling for a dollar right now?
So, there's a lot of debate over this. We have an extraordinarily wide bid-offer spread by the banks, and it's nearly 10%. It's unheard of in previous Kenyan history. The banks are basically making out like bandits on that bid-offer spread. And if you look at their results, the FX side is proving very rich and profitable. And I think they should be tightening up their spreads, and probably that's a reform that the central bank governor can introduce next time round. But essentially, we've seen a softening of the Kenya shilling. We've traded as high as 150 to the dollar. Bear in mind, we're a net importing country on a 3-to-1 ratio. We import 3 times more than we export. And this is a problem. And I think essentially we've got to, this has caused the spike, cost of living spike. It's caused a lot of unhappiness on the ground. As you've seen, it's been pretty turbulent. The opposition has managed to mine this unhappiness about the cost of living side of things. But I think overall, we're going to see some improvement. Harvests are coming. Food prices should come off a little bit. A lot will depend on the oil price, which I feel will go higher. That could be a challenge that's coming at us. But, like most countries in the world, there is no silver bullet to this cost of living issue. And it's very unfortunate. And people at the bottom of the pyramid are experiencing it, the most.
Interesting. So if you summarize all of this for me, what's your outlook, Ali, on the rest of 2023 for Kenya on both the macro, monetary and market side of things? Where do you think investors will be making money on stocks, on equities, and fixed income, or just piling dollars under a pillow and just hope that the old problems of the shilling goes away?
So bear in mind, most investors have been building up dollars under the pillow. If you look at the amount of dollars in circulation in Kenyan banks, in Nairobi, I think it's close to, it's an enormous amount. So I would say, if I look at the economy as a whole, I take the news flow, I think most of the bad news is baked into the price. I mean, if you're shorting the shilling now, I'm not so sure you've got a huge profit margin ahead of you. I think, in fact, you probably want to go long at these very high interest rates and run the carry. The carry's starting to work big time in emerging markets. Obviously, frontier markets take a longer time to react. But I would be inclined, as an investor, to be nibbling on the long side across Kenyan asset prices, obviously with some discipline. But there are some bargains out there. Growth, I think, will remain in this 4.5% to 5.5% range. So that's okay. And I think, things look to me as if we've taken a lot of upfront pain now. And I think over the next 12 months, we're going to see an improvement from where we are today. Shilling could go as badly as 160, but it's then got a bounce ahead of it. But I think it's probably going to stabilize not far from here, and you're getting 16 to 18% tax-free coupon on government paper, which can't be bad.
Look, Ali, I understand all of that. Thank you. But if you guys got extra dollars on the street, I heard there's so much dollars on the street in the banks in Nairobi, please, you can send a bit of that to us. We have dollar supply shortage here, so you can save us. This is an SOS, by the way, but that's not official. I hope everyone is hearing me, listening to that. But okay, we need all the help we can get. If you guys got some chunk of money in dollar terms, just send them over to Lagos. Thank you.